Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Ashish Kyal joining us on the show. Very good afternoon to you, Ashish. And the first stock that you're going to talk about is Sun Pharma. Where do you see this pharma major headed from here on? Do you think that the charts are supported right now?
Or if you look at the overall pharma space, we have seen some kind of a short-term correction here, but I think this will be an opportunity for people to enter, create long positions in pharma. The pharma cycle has been around 6 years old, and we can clearly see it has been now reversing back on the upside. So I'm optimistic that overall the pharma sector should outperform, and Sun Pharma, post maybe after a short decline, might start moving on the upside. So the expectation for Sun Pharma is for a move towards 1060 on the upside, and one can maintain a stop loss of around 980 on the downside.
Okay, keep an eye out on those levels for Sun Pharma. But we also spoke to Amn Chowhan of a Bacchus Asset Manager, LLP, and what he's advising in terms of pharma space, that he's very selective in terms of the pharma. What is he liking in the pharma space? Let's go cross and listen.
You need to be very selective in pharma, but whichever companies which impacted because of higher API prices or higher raw materials coming in from China, now the China supplies are resumed, so these companies are getting those margins back, and hence one can look at this sector also. We are adding to the pharma exposure, and as I mentioned, we are looking at companies which are benefiting from the lower raw material coming in. So that is one space that we are pretty positive, and the domestic pharma space that is doing steadily well. So these are the two sub-segments within the pharma space that we are currently focused on.
Okay, moving on, and let's talk about Tata Elxsi then. Why have we kept this one in focus today? Because Tata Elxsi has actually partnered with ISRO, that's the Indian Space Research Organization, for the upcoming Gyan mission. Now, the leading global engineering company has designed and developed the crew module recovery models for the recovery team training of the space mission as well. Now, ISRO's Gyan project envisions a demonstration of human space flight capability by launching the crew into 400-kilometer orbit for 3 days mission and safely bringing back to Earth, and by landing in the Indian sea waters. So yes, Tata Elxsi has tied up with this. They have executed activities for developing, designing and configuration in accordance with the initial requirements which are provided by ISRO to carrying out the structural analysis for various load cases and material procurement, testing, fabrication and other jobs as well. So let's keep an eye out on this one. This project has marked Tata Elxsi's foray into the mechanical design for space as well. And as this is the first time for ISRO has outsourced the mechanical designing and development work as well. So yes, keeping an eye out on Tata Elxsi, today up 1.7%.
All right, shifting focus, let's talk about Inox Wind, and this one also was buzzing in trade. At one point in time, Inox Wind saw an uptick of as much as 5%. And why is that? Because Inox Wind said that they've bagged an order for a 100-megawatt wind power project from AB Energia Renewables, which is an independent power producer. As the part of the order, Inox Wind will have to supply and install 3.3 megawatt of wind turbine generators with 145 meter rotor dia and also 120 meters of hub height. The project will be executed on a turnkey basis at Dayapar in Gujarat's Kutch district, and is scheduled to be commissioned by 2024. The company, that is the CEO of Inox Wind, after securing this order, said that this order re-emphasizes not only the credentials of Inox Wind Limited as a leading wind energy solutions provider, but also of the strong tailwinds that the sector is currently witnessing. He's also said that he firmly believes that with the impetus in the sector and combined with their latest 3.3 megawatt offering, Inox Wind will be able to grow many-fold from here on. So you can see that optimism, that enthusiasm in the stock price as well. 3.3% uptick coming in for Inox Wind.
Okay, let's move on and talk about L&T then, Ashish, on the charts. What is the view coming in for this one? Recently, it had hit a multi-year high just somewhere around in May. Do you see that coming back anytime soon for L&T?
Yes, it looks like L&T is headed again towards the multi-year high. I think it will cross that 2,400, 2,450 levels as well. And it has been a very strong stock. We can clearly see from the large cap space names, and even in past 3 days it has continued to inch up. Even there is some minor correction that we are seeing today, but that is, I think this is an opportunity to enter into the stock overall. So create long positions here for target of 2450 on LNT. On the downside, the support for the stock is at 2250 level.
Moving on, Vamakshi, let's talk about Tata Communications. We all know that they held an analyst day yesterday. What were the key takeaways from this one?
Well, yes, Cheryl, and that is the reason why the stock was in focus yesterday and continues to be in focus today. While we have a few brokerage notes that came in after the analyst meet, and we have a note coming in from Kotak. They believe that post the recent run-up that has been seen in Tata Communication, they believe that the upside potential in this stock is quite limited. They do have some aggressive growth ambitions, but execution is very key for all this to work out in their favor. So on the back of that, Kotak has actually gone ahead and downgraded their rating from add to reduce. They've also, however, revised their target price upwards from 1,300 to 1,350. Apart from that, we also had a note that came in from MK, and they believe that the company is expected to double its digital revenue from FY23 to FY27. The margin is expected to be anywhere between 23 to 25%, and they're also expecting an ROCE of over 25%. Core connectivity business is also expected to grow in mid-single digits. So all in all, it does look like a good commentary that has come in from Tata Communications, but due to elevated valuations, MK has also gone ahead and reduced their rating from buy to hold, but nevertheless they've also increased their target price to 1,590 per share. But as of now, those downgrades have come in, and that is the reason why Tata Communication is declining in trade today.
Move on and talk about another Tata Group company, and that is Tata Motors, Ashish. I believe they had their analyst meet day as well, and a lot of brokerage notes have come in after that.
Well, yes, absolutely. It is on the back of that analyst day meet that brokerage notes have come in this morning. First up, Nuvama, where they are maintaining their buy stance, but they've gone ahead and revised their target price from 620. Now they've revised it upwards to 645. They say that the company is firing on all cylinders. Expectations of continuation of cyclical upturn as far as JLR business is concerned is what they are bullish on, and that is the reason they have increased their FY24 and 25 EPS estimates by 2 and 5% respectively. We also have Morgan Stanley, which has maintained its overweight stance with a target price of 617. They say that they expect 300 basis point improvement as far as EBITDA margins are concerned, seeing continued growth in CV volumes as well as tonnage. Motilal Oswal, meanwhile, has reiterated its buy with a target price of 650. They say that the focus on discount moderation is paying off from the company. Although all of these brokerages have come out with bullish notes, the stock, of course, is declining in trade today in line with the broader markets.
All right, moving on, Ashish, let's talk about MCX and where you see this one headed. This one, definitely MCX did see a rough patch in between, but then it's trying to consolidate, hold on to those levels of around 1,500 or so, isn't it?
Yes, absolutely. So we saw some kind of a correction in MCX earlier in the year, but if you look at the performance since the mid of May and until now, it has shown a spectacular move on the upside, an impulse rise from 1350 levels, and it has reached towards 1550. So I would be looking for buying opportunity over here. Any dips that you can get, use that as a buying opportunity with a stop loss of 1480 on the downside and expecting it to reach the target of 1650, which is the previous high.
Okay, keep an eye out on MCX and those levels over there. Let's move on and talk about Masgao Dock again, because why is this one in focus? Because Germany's ThyssenKrupp and India's Masgao Dock shipbuilders have actually signed a memorandum of understanding to build 6 submarines for the Indian Navy, estimated to be worth approximately $5.2 billion. Now, under the terms of collaboration, ThyssenKrupp will be responsible for the engineering and design aspects, while Masgao Dock will oversee the construction and delivery of the 6 submarines that the Indian Navy has tendered. This is as per the statements coming in. Now, let's keep an eye out on both these stocks today. What we're seeing coming in is also the stock has given up those gains as of now, Masgao Dock, but had been buzzing in the last couple of trading sessions as well. So keeping an eye out on Masgao Dock today, as of now, down 0.4% in trade.
All right, moving on, let's hear out what Harsha Upadhyay of Kotak AMC had to say on the entire defense pack. One key point that he did say, he's seeing some more room for re-rating in the entire space. And why is that so? Listen in.
The runway for growth is really, really long for defense stocks, I would say. There is a higher scope for indigenization, which will improve margins. there is an export opportunity, and also the order book continues to be very, very strong, given that government is continuing to spend on the defense capabilities. So overall, this sector will definitely look at higher level of average growth rates as compared to what we have seen in the last 5 years or 10 years. So as a sector, definitely this is something that will see a re-rating. Part of that re-rating has already happened, I would say. We have also seen some thematic funds coming into the mutual fund industry, looking at defense in particular. So if you see more money coming into some of these thematic funds or more launches seen in this category, that could also lead to a lot more re-rating, because there are not too many listed names at this point of time which are into defense. So overall, the long-term growth looks really, really strong, and there is room for further re-rating from these levels as well.
Okay, Ashish, these power names have been doing quite well. That Nifty Energy also is among those actually sectors which are actually trading in the green today, and NTPC is the one that you picked out for us today. What should we be expecting in terms of trends here? This has managed to give consistently mild returns over the last few years as well. So what should we be seeing now in terms of NTPC?
Yes, I agree with you that over the past few years it has not done much. But if you look at the level of 180, 181, it has been a very, very important level. And today we are seeing a strong positive candle formation, huge volume pickup here. And there is a possibility that we will have a very strong breakout out of this consolidation of past 6 months, 7 months of area. So overall, I am bullish on NTPC, anticipating a strong breakout from here, and the pattern target on the upside comes to around 200 levels for the stock over short term, and maybe much higher eventually. And on the downside, the support for the stock is at 176 levels.
All right, moving on, let's talk about the cement pack. The entire cement pack will be in focus in today's trading session. You had the wire agency, that is Informist, do a dealer's check, and there they said that the cement companies have cut prices in some of the southern states, and this price cut has come back of weak demand as well as competition. So the price cut that they've taken in the state of Andhra Pradesh is by 20 to 30 rupees for per 50 kg bag. In Telangana also the quantum of the cut is the same, that is 20 to 30 rupees per bag. While in Tamil Nadu, they've cut the prices by about 20 rupees per bag. So that's one of the reasons why. So you have Ultratech, India Cement, Shree Cement, Ramco Cement. They are among the companies which took that price cut. So when the news did come out that the cement companies had gone ahead with the price cut, you saw all of them reverse all of their morning gains, and you saw a sharp cut come in all of these stock prices. Some of them have recovered from the day's lowest point. Nevertheless, India Cement, as you can see, 3.4% downtick coming in on the fact that the cement companies have gone ahead and taken a price cut in the southern area. So that's one of the key things to note.
Okay, keeping an eye out on those cement packs, let's watch out for what they do in trade going forward. But Ashish, alkyl amines, you picked up this one for us on the charts. What is the indication that now you're seeing coming in for alkyl amines? What is the target price that we should keep here?
See, alkyl amines has formed a very classic flag, pull and flag pattern, and has given a breakout out of that pattern. It has found its support near the 20 days average as well. So it is starting a short-term up move from here, and we can expect a target as per the pattern around 2750 levels. And the volumes are also picking up with the up move, so that is healthy sign. And 2750 is the target. On the downside, one can maintain a stop loss of 2480.
All right, moving on, Ramashi, let's talk about PB Fintech then, and why is this one in the spotlight?
Stock is in focus after we have a brokerage note that came in from Bank of America. Now we have seen a very good run up as far as the stock is concerned. In fact, on a year-to-date basis, the stock has seen an uptick of almost 42%, and what Bank of America believes is that this price is largely pricing in the management guidance of net profit of almost 1,000 crores by FY27. Now they did post a growth of almost 80% in FY23, but the growth rate going ahead is expected to slow down to nearly 30% on the back of a higher base. They also believe that a cutback on ad spends that the company could do could also pose some downside risk as far as growth is concerned. But nevertheless, the fundamentals for this counter look good. There is low online insurance penetration, and with that, the company has a very strong market share of almost over 90%. Core insurance business is also profitable with nearly 13% EBITDA margin. And in fact, when we look at the valuation, the stock does seem a little bit expensive. It is in fact trading at an FY25 price to sales of almost 6 times as compared to 3 times of Paytm. Now, all the positive factors are definitely working in favor for PB Fintech, but largely they seem priced in. So on the back of that, Bank of America has actually downgraded its rating on this stock from buy to underperform, but left the target price unchanged at 600 per share, and that is the reason why the stock is declining in trade today.
Okay, that's the stock we want to watch out for in trade as well. Let's move on and talk about Grindwell Norton then. And Ashish, on the charts, what are you seeing? Because this stock has surely seen a good up move in the last 1 month, 13% return in the last 1 month. Even before that, in the last 1 year, also 24% return. What is the upside that we should be expecting now here?
See, Grindwell Norton is forming a good rounding bottom over here, and it's going to give a breakout. The neckline of this rounding bottom is around that 2,150 mark, and I'm anticipating a strong breakout over here. So long positions can be created. One can maintain a stop loss of around 2,000 on the downside, and the target can be expected to be near the previous peak that has reversed the trend, is around 2310 levels. So 2310 is the target for the stock, and it might be achieved very soon.
Moving on, Ashesha, let's talk about OMCs, HPCL, BPCL and IOC. No doubt we saw a sharp dip in the crude prices, but that's not reflecting in our retail prices, isn't it?
Well, absolutely. And some important commentary has come in from the oil ministry, where the oil minister has said that there is no under recoveries on petrol and diesel sales for these oil marketing companies now. Remember, when crude oil prices had shot up, all of these oil marketing companies were making losses on their petrol and diesel sales. And now ministry has confirmed that there are no under recoveries as far as these sales are concerned. They say that oil marketing companies are in a better position now, and they have by and large returned to the normal situation. Oil ministry wants oil marketing companies to cut down on the retail prices of petrol as well as diesel. They say that these companies have ample room now to cut down on their retail prices, and they want the benefit of lower crude oil prices now to be passed on to the customers. So on the back of this important commentary that has come in from oil ministry, all of these counters are in focus today.
Okay, let's keep an eye out on all these OMCs then in trade as well. But shifting gears and talking about the IT space, we all know that we've seen a decline coming in, and Ashish, you picked out TCS for us. After that fall and nothing much that the IT pack has done over the last 1 year, finally the right time to pick up TCS is now, or would you be waiting for some bit more of a correction?
It's very interesting to see that the large cap IT space is correcting and the mid cap IT space is buzzing. So my take is going to be possibly selling from the large cap IT space. As of now, I'm not too bullish over here. TCS, if you look at it, it reversed back from around 3,350 levels, and it's not showing any kind of a positive attempt yet. So over short term, there is a possibility TCS can move towards the level of 3180. The short term correction is possible here. 3180 is the target. On the upside, 3290 can be the hurdle or the resistance level. So I would not look for buying opportunity in the large cap IT space, but definitely mid cap IT space looks promising.
Okay, so TCS maybe could see a bit of a correction in the short term as well, and not much of a buying opportunity in the large cap, but mid cap is what IT is what Ashish is looking at. Let's move on and talk about Titagar Wagons. This one is in focus because the board is going to be meeting on June 10th to discuss the fundraising plans for the company. They're going to be considering fundraising via issue of equity shares or secure any other security, QIP, right issue, preferential issue, or any other mode that is suitable coming in there as well. And as of now, when you look at it, the stock even managed to hit a 52-week high today as well after this announcement was made. So yes, keep an eye out on this one. As of now, we will keep an eye out on the fundraising plan, how much is the fundraise that they're planning to do. The stock has given up those gains as of now and trading with a decline of almost 0.2% in trade.
Right, that's Titagar Wagons for you. Profit booking is what you're seeing on this particular counter after seeing a sharp uptick at the day open. But Amn Chowhan of Abacus Asset Managers believes that the railways is a multi-year theme. He also believes that the next 3 to 4 years will be very good for the railway companies. Listen in.
Railways to us is a multi-year theme. It is not just they have these companies will do well on a 1 year basis. The way the Indian railways are getting modernized, the way things are changing, and the way the government focuses on this segment, we feel next 3-4 years at least the order book, the business outlook for most of these railway companies is going to be positive. It's also that they are coming out of a long run. Most of the companies in the railway sector, they had a rough or a bad patch for almost 7-8 years, right? So you're now coming out of this. It is not just going to be 1 year of good year. You're coming out of 8 bad years. At least next 3-4 years are going to be good years for most of these companies. So from a business standpoint of view, most of the companies now have a 3-year order book visibility the way a typical EPC or a construction company would have. Same thing is now happening with these railway stocks also. So they have 2-3 years of order book, and over the next 2 to 3 years they are going to add on to this order book. For the next, I can safely say for the next 3 years, railways business wise is looking good.
Okay, let's move on. And Ashish, Dixon Tech on the charts, what is this one indicating for you there?
As I said, the mid-cap IT space looks promising. Dixon has shown a very sharp rise from the level of around 2,900 and now at 4,000 levels. So that's a very smart rally that we can see here. And there is any kind of a dip over here can be used as an opportunity to enter long in this stock, maintaining a stop loss of 3,800 on the downside and expecting a target of 4,350.
All right, so that's the view coming in on Dixon Tech. Just taking a quick note on what the markets are doing at this point in time. As you can see, we have actually slipped a bit more further. But I don't think we're at the day's lowest point as of now. 90 points downtick coming in for, so we've gone to the day's lowest point for the benchmark indices. As you can see, 90 points downtick from the day's highest point. And Nifty, that is for you. Also, you have Sensex also that's seen a dip from those elevated levels. Now it's just testing that 63,000 mark. But let's talk about Gujarat Pipavav then, and why is this one in focus? Because the company came out with a slew of updates today. One, they said that the force majeure in their plant, or rather in Pipavav port, has not been lifted. It still continues. But what they also said that vessel operations have actually commenced from June 7th. They said that the restoration work of the uprooted power transmission towers of Gujarat Electricity Transmission Company is in progress. So they did say that the force majeure continuing at Pipavav, but nevertheless, vessel operations has started. So that's the reasons why the stock is seeing a good uptick of about 2.6%.
Okay, 2.6% uptick there on the back of a news flow as well. And Ashish, on the charts then, what are the indications that you're getting? Is this run-up that we're seeing today here to stay for Gujarat Pipavav?
Yes, it looks like that because it formed a triple bottom rather at around 106. It tried multiple times, found support there, showed a very strong bounce back on the upside. So it looks like we are going to have a positive move on the upside towards the level of 127. So 127 is the target for Gujarat Pipavav, and one can maintain a stop loss of around 110.
All right, Vamakshi, Hero MotoCorp, why is this one in the spotlight today?
Well, Cheryl, this stock is in focus. We did catch up with the management, and here are some important takeaways from that meet. Now, in the current year, they're expecting to have many launches as far as the premium segment is concerned. New bikes are expected to roll out every quarter. In fact, they seem quite enthused about their association with Harley-Davidson, and in fact, they believe that this association could add to the brand's premium push. Market share improvement is also expected with the new launches. Apart from that, talking about their EV segment, the management said that they're aiming to build leadership in electric vehicle segment. EV space is currently undergoing a rapid churn, and in fact, they believe that the EV space could see very few players after the market consolidation. They also said that they are planning new electric vehicles at the middle and as well as the bottom end of the market. As far as the global sales are concerned, they will be focusing on 8 to 10 top markets, and in fact, they will be focusing more on Colombia, Nigeria, Bangladesh, Nepal, as well as Sri Lanka. And in fact, they're expecting to maintain a target capex of almost 1,000 to 1,500 crores every year. So largely, that is the news flow surrounding Hero MotoCorp. The stock is holding in the green as of now, up nearly 0.7%.
Okay, let's move on and talk about Radico Khaitan then. And Ashish, what are the charts indicating for this one now? Should we expect some correction here, or maybe time for an up move?
Khaitan has slowly and steadily continued to inch on the upside, and there is a minor resistance around 1215 levels, but it looks like it's going to break that resistance level, and if once that happens, we are expecting it to move towards the level of 1250. So over short term, I'm going to be bullish for this stock for the target of 1250 on the upside, and the support for the stock is around 1170 levels.
All right, moving on, let's talk about Gati then, and that particular counter is in focus in today's trading session. They've come out with their May business update. They said the total volume, including surface as well as air express, rose by about 8% and 1%. That is, 8% on a quarter-on-quarter basis, 1% on a year-on-year basis in the month of May. They said the volumes in May continue to show an improving trend owing to an uptick in the preparations for the upcoming festive season starting in the last week of May. That is what they had actually said in their May update. A very healthy update coming in from Gati. And you can see the stock price as well trading higher by about 5.8% as we speak.
Okay, that is Gati for you all. Let's keep an eye out on that one. But that was the last stock for today. Thank you so much, Ashish, Shesha, as well as Vamakshi for joining in with us, as well as Kunal, who was with us earlier as well. And it's a goodbye from Cheryl, myself, as well as the team who put the show together.